order because we do have a quorum with 2 of the 3 members of the committee, and my preference is to go ahead and act on at the committee meetings. There was a history of only having 1 member of the committee present in the past, and I think it's important for us to go ahead and transact business. So having said that, I guess I could ask John to move, now that the meeting's been called to order, move to approve the adoption of the agenda, and then I could second.
I move that.
Then I'll second, and if you and I are in favor, say aye.
Aye.
Aye, thank you. Also, John, I'll look to you to move the approval of the minutes for May 18th.
I'm so moved.
Second. And all those in favor? Aye. I love it. I'm going to pass it to Steve for audit services.
Good morning and a happy Friday, Chairwoman Lanahan, Chairman Baker. Yes, Landon, I think if we can go ahead and start with, I guess it'd be slide 9, the one entitled FAI Highlights. Couple more. One more. Perfect. Thank you. Okay. All right. First thing I'll say is for the behalf of the board members, the August meeting is audit services center stage. Obviously, because we have the 2 action items: the internal audit plan for the coming year and the annual review and approval of the charter. But we're going to move quickly. I presume. Hopefully, we've done a good job of articulating what we've been doing. And but anyway, let me start with this page because forensic audit investigations. A shout out to Julie Moore, our manager. Right now, she is in the department. We're down 2 auditors at the moment. We had a recent unsuccessful recruitment. We'll probably try to crank that back up in the coming weeks. You can forward, Landon, please. Next slide. Yep. Okay. Perfect. Yeah, that's fine. The prior slide was the cases that were opened. Right now we have 15 cases open. Obviously, because Julie and Terry Lund, while she was here, were working with the corporate records compliance group on the backlog of the public records requests. We are back on normal operations now. So we didn't close any cases last year, but as Paul can attest, we are closing them now. We had 2 reports cross his desk yesterday, and Julie projects by the end of next month, which is the end of quarter end and year end, we will have closed 10 cases in the quarter. So it's obviously a different story from the past quarter. Okay.
Thank you for their efforts, Steve. Make sure they know how appreciative we are for their help with the public records request. That was a really important effort.
You're very welcome. I'm probably listening in, so I will convey that all the same. Okay, turning to page 13, Landon, current ERM initiatives. Thank you. Okay, these next 2 slides, I'll just kind of summarize again. Like Julie, Frank DiBenedetto is kind of a one-person department right now, but he's working hard on a senior analyst recruitment. That's been actually open for about 2.5 years. We just got news this morning from Human Resources that we have 52 applicants, which is wonderful. Obviously, it'll winnow down to a more manageable interview level, probably a handful, but hopefully we'll find a prime candidate in that group. It's a large group to be sure. Frank is also working diligently with the SLT and their management teams on updating the various corporate risk profiles. There are 40 plus in total. And now as an example, my compliance team and I will be meeting with the Enterprise Corporate Risk Committee, the ECRC, in October to kind of talk about our risk profiles and how we've updated them and updated the mitigations on those. So probably over the next 6-7 months, all the various business units will be having that similar presentation, working with Frank, and hopefully a new senior analyst in tandem with Frank. But we feel like that the ERM tool has been in place about 15 years now. It's an excellent tool. It's a process. What I'm calling it, it needs some burnishing, it needs some updating, but I'm calling it the future state of ERM is where we are right now, trying to move to get it to kind of where we want it to be. But those are kind of the stories for those 2 groups. We're going to do kind of a passing back and forth between Lee Montanez and myself. He's our internal audit manager. So he's going to talk for a while about what's been going on in internal audit. So Lee, you're up.
Steve, before you leave.
Yes, sir.
The slide says reestablish a bottom-up approach. Did we abandon that, or is it just what you talked about that we're trying?
Yeah, what it is that normally what we found kind of more in the recent years is there's been a lot of what they call the tone at the top, where we're doing a lot of engagement with the SLT and the directors, but we're not always certain that the people at the entry level are really knowing, because you'll ask them, well, I don't even know what enterprise risk management is. So actually, one thing we started down that path was about a year ago. We put together about a 10-minute CBT computer-based program to kind of talk about every employee's role in managing internal controls and obviously overseeing risk management. So even though a lot of people, even at the entry level, don't realize it, they're working with controls and risks every day. So that was kind of the first step towards bringing that bottom-up approach. But there's going to be a lot more work around that, Chairman Baker.
Thank you.
Yes, sir. You're welcome. Okay, Lee, you're up.
Oh, thank you, Steve. Good morning. Landon, next slide, please. No, a couple more. One more. Thank you. So good morning. My name is Lee Montanez. I'm the manager of internal audit. And as part of the team that works with Steve, I'm going to present the internal audit highlights. Just like the forensic audit team, my auditors were involved from March all the way to July on working on the public records request backlog. So we strayed away a little bit from the audit plan. That up to that time, we were on track to work on public records requests. They've jumped back into the audits, so that's good news. Also, as part of the highlights for this quarter, it's our process of setting the internal audit plan for fiscal year 2021. So I'll be discussing that in the next couple of minutes. We just finished an engagement of the JEA renewable energy credits through Green that was completed. And Lori Gahn, which is our senior auditor on our team, she's leading for the third year the TEA audit. This is our last year before we turn it over to city utilities. Next slide, please. This is our calendar. Steve presented this during May. There were some postponements. There's some audits moved to 2021, which I'll discuss in the next couple of minutes. The good news is the audit team is back on doing audits, and we got 3 audits now in the pipeline with a report coming out in the next 30 days. Next slide. So during this quarter, we worked on we worked on the Green procedures engagement, and we worked on a special project related to fleet services, tire contract review. Next slide. This next slide is a list of our open audit and investigations report issues. It seems like a big number here, but our team is on top of all the executives, and they provided us with great information and updates on all these. So we have no issues, and we believe they're going to be completed on time. Next slide, please.
Lee?
Yes.
What often the internal audit department kind of runs into a wall with dealing with operational people. What is the stature of the internal audit department within JEA, and are you getting, when you raise issues, are they getting fixed timely and appropriately?
Well, I've worked with JEA for the past 9 years, so I've been an auditor and then a manager. And I'll tell you this, management has always been open to our audits. They trust us. They trust us as advisors, and we always get good information from them, and they're open to our audit issues. In the end, we have to prove to them that this provides value to them, and they understand it, and they embrace it.
Thank you. That's great. Awesome.
This next slide here is just a listing of the open action plans by the issue rating and the VP or chief. Again, this is just a listing. We work with them on these. Next slide. And these are what we call our major issues. So we have several major issues that are due pretty soon. Auditors have worked with the teams, and we're progressing very good on these. Next slide. That's all I have. So unless there's other questions, I'll pass it back to Steve.
Thank you very much, Lee. Okay, this is the,
Steve, excuse me, this is Paul and Chair Lanahan. I just want to recognize that Board Member Stein has joined us as of 3 or 4 minutes ago. Thank you, Steve. Go ahead.
this, Chairwoman Lanahan, this is the first of our 2 action items. This is
And actually, I'm sorry, I was trying to talk and I was on mute. I just want to make sure that we didn't breeze over the major category or major rating issues. And in my mind, these are not at significant. Major is an important word, but I think that you guys have, from what we've discussed in the past, you've got the right action plans on those.
Yes, Chairwoman, that is correct. And like I say, management's always been very responsive to mitigating and getting the recommendations cleared in a timely manner. So we have a very good working relationship with them. Okay, the first action item is the internal audit charter. I'm going to we'll go, let's see, next 2 slides. Stop there. That's perfect. Actually, back up 1 if you don't mind. I know we don't normally stop and dwell on the cover pages very long, but there's an important point to bring up here, as you all saw reading the materials, that technically I'm wearing 2 hats now, which is fine. You know, we're managing fine operationally. It's only problematic with this particular document because technically it probably doesn't behoove us to have the employee who is drafting the updates to the charter, the Director of Audit Services, which is currently me, actually have it go up to the signatory, who would be the Chief Compliance Officer, who also happens to be me. So the point making this year is that just for this snapshot in time, we actually made Paul the signatory. Now, obviously, when we get to next year, well, let's go ahead and move over a couple of slides. Here's the summary of the updates we made this year to the charter. The one is that we had a president COO position in the hierarchy on the roles and responsibilities section. That's right now inactive or dormant position. So we took it out of the reporting mix for this point in time. And then on page 4 on the internal auditors section, this is something I've been looking at over the years, is that obviously it's intuitively obvious that EY, our independent auditors, does the pining of the financial statements. So we don't want to be redundant and do that audit work. But we do, obviously, I wanted to make the point that we do operational audits in the finance area. So that was just something I wanted to add to the charter. And then finally, what I was talking about earlier is that it really makes sense for, you know, obviously the review and edit process, if it's me on both cases, it moves really fast. But we think just for this year, we needed to have Paul's name in there. Now, obviously, next year at this time, we'll probably have a new managing director, CEO, and he or she may have a whole different way of organizing the company. So it's very possible the charter will change yet again. So, so with that in mind, unless y'all have any questions, I'll thank you for your consideration of approval of this updated charter.
Is there a motion to approve the updated charter?
I so move.
Second, Bobby? Well, then I will second.
I'll second it, Marty.
Okay, no worries, no worries. Thank you. Is there any further discussion other than to thank you for picking up the obvious conflict and having Paul inserted as the approver? I think that was brilliant.
That is it. Thank you very much. And so now the last leg of our relay, I'm going to pass the—
Wait a minute. We have a motion and a second. I need to call for a vote. We need to vote. So all those in favor of accepting the annual approval of the internal audit charter signify by saying aye.
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 Aye. Great. Thank you. All right. Now we can go.
Okay. All right. So now I will pass the final leg of the baton back to Lee to finish off with the review and approval of the annual internal audit plan for fiscal year 21. Lee?
Thank you again, Steve. Can we get, Landon, can we get to that presentation, please? Perfect. One slide. Next slide. Oh, perfect, right there. So let me start with the role of internal audit. We're a shop that we abide by the Institute of Internal Auditors. And in a nutshell, you know, internal audit helps organizations succeed. We do this through a combination of assurance and consulting work. The assurance part of it involves telling directors and managers how well the systems and processes designed to keep JEA on track are working. And then also something that we always try to develop is these consulting services to help improve system and processes where necessary. Next slide, please. So as part of the IIA, we have to follow a risk-based audit plan guidance. And what I've stated here is the standards that apply to creating a risk-based audit plan. But the truth is, all that we requires is to establish a risk-based plan is to provide a documented risk assessment, consider input from the executive team, and then what we're doing right now is communicating our plan to the committee for approval. Next slide. So as part of our approach, what we do is we take a look at JEA and we look at JEA and list the auditable entities for JEA. We then conduct interviews with the SLT members, and we administer the risk assessment to them, to the managers and directors. We go ahead and rate and score these risk assessments, and based on the information, the total information that we get through this process, we develop the internal audit plan. We also get information from enterprise risk management and from the investigations teams to find out if there's any control deficiencies in some of these areas. Next slide, please. So the risk assessment survey, every year we change the survey. This year we've changed it again, but we really focused this assessment on the COSO framework, and COSO is the Committee of Sponsoring Organizations of the Treadway Commission. And all we're doing here is looking for internal controls related to the effectiveness or questions. We submit questions on the effectiveness and efficiency of operations, the reliability of financial reports, and compliance with applicable laws and regulations. As part of our survey, we also include technology and data risk questions. We added a section around COVID-19 effects on all risks. And we also asked for any timing or audit concerns due to them having, a lot of these areas do have external parties come in and audit their operations. Next slide, please. So putting together the audit plan, we came up with 20 scheduled audits for fiscal year 21. Out of our risk assessment process, we identified 14 new audits. There is a special project. We also had this recurring project related to performance pay, but we now know there's not going to be one for fiscal year 2020. We still have our external-led audit of the Energy Authority, which is our third year and last year, leading that audit. We got the Greenie agreed upon procedures engagement and 2 follow-up audits. And can we move to the next slide, please?
Can I ask a quick question about scheduled versus unscheduled audits? I mean, you've got the right to do an unscheduled audit if you want, correct?
Yes, we do. It would be part of a request from management to do so.
Okay, I just wanted to make sure. In my business, we typically do unscheduled visits to banking centers for obvious reasons.
We will. There's a need. Steve and I always talk about the audit plan, and Steve always says that once we put this audit plan to paper, it becomes stale because 6 months from now, management may have a need for us to look at some operations or something else, and then we have to look at our plan and see where we can make that fit.
Great, thank you.
Lee,
yes.
This is John. If you read the rating agency's comments about us, they describe a lot of what went on in the previous administration as failure of controls. And they say it over and over again. And that begs a question to me: have we ever looked at what went on there? And we'll know more when the council report is published. and see if we have sufficient controls to stop some of the things that occurred that should not have occurred?
Steve, you want to take that question?
Yeah, Chairman Baker, let me talk. Actually, interesting, I was mentioning preparing for the compliance group, getting ready for the ECRC meeting in October. We had a preliminary meeting last week, and we were talking about that as far as, you know, what could we have done differently, not just in internal audit, but just kind of like, you know, raising the hue and cry or whatever, and kind of, but that's something we want to talk about, is kind of building in those red flag indicators or things to say, if something like this ever happened again, what would be our mechanism for reporting out and saying, we see a problem brewing?
Well, and it's interesting, John. I spent some good time with John DeSanto, who's going to present here shortly, our E&Y lead auditor, lead partner, and we talked about that. And during that period of time, I'd like to ask for clarification from the rating agencies, because I asked John that question. It appears that they were not financial control issues. They were more probably administrative control issues, but John will be prepared to address that in a minute.
Great, thank you.
Okay, going back to the audit calendar, this is the audit calendar for fiscal year 21. There's a listing, there's an appendix in these slides that describe each one of the entities that we plan to look at for fiscal year 21. Next slide, please. And then I just want to finish with the internal audit team. My team, they're all experienced auditors. They've been with JEA many years. Most of them have certifications. And again, our role as internal audit is not to be a corporate cop, but to be more of trusted advisors to the business. And that's where we want to really, really get to. And that is done by the auditors gaining the expertise, gaining organizational awareness, and achieving the strong interpersonal skills. You know, being trusted advisors just provides management with more than a list of issues. What we do as trusted advisors is provide useful, timely, and relevant, you know, suggestions and to the business.
But and I'm sorry I didn't pipe in earlier, but lessons learned. I know, Marty, you make a good point. This is financial, not procedural, but I think, Paul, and we should look at a small group to look at lessons learned from what happened, why it happened, and what can we do to make sure nothing like this happens again.
That is a very good suggestion.
And it may be, Bobby, Willette is coming up next, and it may be that because we have talked in the previous Finance and Audit Committee meeting about making sure that all of our associates understand that our code of ethics is in place and we need them to speak up. And I think I noted last time that there weren't that many speak ups. So I think maybe we double down on our ethical behavior, which is coming up next in our presentation.
But I'll just jump in. I guess I'll try to take this in comments from both perspectives. I mean, reaching out to the rating agencies, get clarification in terms of the controls, looking at lessons learned, and incorporating sort of what's going to be discussed in a little bit, getting input from E&Y. But we may come up with maybe a third review of this with another firm that can sort of give some support or credence to the fact that we have addressed this in very serious ways and put some controls in place to prevent this from happening in the future. So I'll definitely take that and work with the team.
Yeah, that's great. Thank you.
Well, that is the end of my presentation. If there are no other questions, I think it's time for the board, for the committee to approve the audit plan for fiscal year 21.
Is there a motion?
I move
it. Second.
All right, there's been a motion and a second. Any further conversation? All those in favor?
Aye.
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 Thank you very much. Then we'll move to, well, that great work, guys. And again, thank you for the public records request help. That was really important work and has been well received. So thank you for that. All right, well, that ethics officer report.
All right. Good morning.
Good morning.
All right, Landon, can you go to the next slide for me? So I thought I'd start our presentation off a little different than I've done in the past to kind of talk about some of the
Wallette, we're having a little bit of difficulty hearing your audio.
Can you hear me now?
It's really low.
Is that better?
That's a little better. Go ahead and proceed, and we'll continue to monitor.
Okay. So, as I stated earlier, I wanted to change my presentation up a little bit and talk a little bit more about the.
Still very
Wallette, I'm
garbled.
going to go ahead and stop you again. It looks like you're garbled again. We may need you to use the call me back feature on your cell phone.
Okay.
I'll send that over right now.
Still.
While I'm doing that, are you using headphones or
Yes.
the computer speaker?
I'm
You're using headphones?
Yes.
Okay.
Let me just take the headphones off. Got them on because the alarm is no more.
Ontario, you're online. Go ahead and reach out to Wallette real quick for me and get her set up on the call me back feature.
Okay. I've got my phone.
Should we move to the next agenda item while we're waiting to get the technical issues resolved, or is this a quick fix?
Yeah, I'd suggest we move on to the next one, and we can circle back.
Okay. Well, you're very important to us. We want to hear you, and we want to hear every word that you say. So we will move on with the annual audit plan, and I'll start by saying John and I spent some time together this week, as I mentioned, and he's committed that he's going to stay in touch with me through this process, and obviously does stay in touch with management. But we've got an agreement that if there's any significant issues that he'll reach out to me immediately, and then we'll pull the committee back in as needed. But John, I will pass it to you.
Okay, great. Thank you, everybody, Madam Chair and members of the committee. I do appreciate the opportunity to present the external 2020 audit plan. We are required under current auditing standards to communicate our audit plan to those charged with governance in organizations like this Finance and Audit Committee. We can move to the next slide, please. Just an executive summary of our plan. First, as far as timing goes, we've actually started our planning and our interim work. In interim, we do our review of your internal controls over financial reporting, as well as some transactional testing. And that's taking place during this month and next month. And then starting in October through the very beginning of December, we perform our year-end procedures. We typically issue our audit opinion around the first week in December. Historically, we've issued it between December 1st and December 5th. So we're expecting to issue our opinion somewhere during that time frame. As far as our audit strategy, including significant areas or significant risks that we identified, there is a separate section of the presentation where I will review and go over those with you. As far as involvement of internal audit, we do plan and have historically used the City of Jacksonville Council auditors in select areas. They provide about 200 hours of audit assistance. Typically, the areas they look at are the travel and entertainment expenses of both management and the board. They also help us with transactional testing in the areas of expenses and capital assets. So we expect that level of assistance to be consistent with previous years. Moving to the middle of the slide, as far as any new accounting or auditing guidance, There are no new accounting or auditing standards effective for this 2020 audit. The GASB, in their infinite wisdom, did a great job of delaying by 1 year as a result of COVID all of their standards that were issued but not yet effective. So that did result in pushing back one standard that would have been effective for 2020 back to 2021. As far as significant considerations, and I will spend just a little bit more time on the COVID-19 impacts. I think that's on the next slide. We'll continue to monitor Plant Vogel. We're very happy to see, and we are, of course, aware of the settlement there. So we will be reviewing the disclosures, the updated disclosures related to that. That will be in your audited financial statements. As I mentioned, we'll look at the COVID-19 impacts, and the next slide, I'll go over that in a little bit more detail, albeit briefly. And I did want to touch base with you. We typically complete our federal and state grant audits during the months of April through May, and we did issue our opinion during early June, and we did issue a clean or an unmodified opinion on compliance with those requirements, and we had no audit findings. Moving to the right of this particular slide in the area of audit innovation, I'm very happy to say this will actually be the 4th year that we'll be employing a data-driven or a data analytic approach to your audit. And what that really means from a finance and audit committee perspective is that we're able to, in the area of revenues and payroll expenses at this point in time, and we're going to be moving on to operating expenses as well as we progress through our contract with you all. But we actually review 100% of your transactions using data analytics, looking for anomalies and making sure that your revenues are ultimately received in cash and your expenses that are reported ultimately get paid in cash. So again, the comfort to you as an oversight type of committee is that we're looking at 100% of transactions as opposed to maybe doing smaller samples of maybe 50, 100, 200 items. So we're able to look at every transaction in the areas of your revenues and expenses. And inquiries at the very bottom right of this, I will be making the inquiries. There's a separate slide later on, and I am required under auditing standards to make certain inquiries of those charged with governance like this committee, as well as the members of management that are present on this call. So if we can move on to our next slide, please. This slide our firm has put together, and we've put together on the impact of COVID-19 on the power and utility industry. And I really I'm not going to walk, it's a very busy slide. You can certainly read it at your leisure. I'm sure most of you have gone through it. The important things, though, are really number 3 and number 4, the risk factors related to COVID-19 and the potential impacts. And where we see that and how it has affected your organization, I really don't need to tell you, you know, but we're going to be looking at the impact on revenues, both current fiscal year and future and projected revenues. Obviously, collectability of those revenues is an issue. I know you've had some uptick in potentially uncollectible items, so we're going to be paying particular emphasis on the allowance for doubtful accounts this year, and whether or not there are any impairments to fixed assets resulting from their future utility and ability to generate future revenues. That's where we really see, in addition to a footnote disclosure in your audited financial statements, see the primary impact. So that's where we will be focusing our audit efforts as it relates to the impact of COVID-19. We can move on to the next slide, please. This is our client service team, and there's only 2 things I really want to point out on our client service team or your client service team. Everybody that's on here has prior experience with JEA. For your information, this will be my 5th audit functioning as the partner in charge of your audit. All the other members of our team have been with y'all for at least 2 to 3 years. You will note at about the middle right-hand side, we have not yet identified a manager for your audit. The prior manager had resigned from the firm. We are in the process of finalizing that appointment, and obviously we'll be communicating with management when we get to that point. It will be somebody who's local in Jacksonville and and has experience with it. May not be direct utilities, but certainly in the public sector, because we think that's important for your organization. We can move on. Yes.
Is there a rotation policy for the managing director?
Yeah, it's interesting. Marty and I had talked about this just earlier this week, and since the rotation policy, the AICPA is what would govern that, and they have what's called long association rules, and their recommendation is 12 years for the partner in charge of an audit, as well as the senior manager on the audit. Both Tara and myself joined the audit team at about the same time, so we're entering our 5th year on your audit. Obviously, at the committee's direction, and one of the benefits of working with a larger firm like Ernst & Young is that we do have the ability to rotate more frequently if that's something that the committee would desire. But we do pay particular attention to that. Even prior to my time, we've been doing your all's audit for about 16 years. I think this is our 16th audit. We have rotated partners. This will be the 3rd time. So as you can see, typically we haven't had an issue with that in the past. And again, that is one of the benefits of working with a larger firm.
Thank you.
Yes, sir. Can move on to the next slide, please. And the next slide. As I mentioned, these are the areas of audit emphasis. One thing I will note is that these areas of audit emphasis are typically those larger balances on your statement of financial position and or your statement about your operating statement, or items that are more subjective in nature and subject to estimates. So these are the areas of emphasis. There are no new areas of emphasis this year, other than, as I mentioned, evaluating the impact of COVID on your organization, which was really all not that significant from a materiality type standpoint, but we are going to evaluate that anyway. The next few slides, I'm going to spend about a minute maybe on each of these areas. Some won't be as long as a minute. So if we can move on then to the next slide.
John?
Yes.
What are other utilities doing for reserves on consideration of COVID?
Yeah, I mean, what they're doing is, most of them, similar to JEA, have policies, regarding based on how past due certain accounts become. But they're using that, and we do know that JEA for a period of time was not, I'll say, turning off people's powers or shutting off, and that's consistent with what other utilities have done. But recently, they've gone back to using that as a mechanism to ensure payment. Although JEA, as well as other utilities, I think are being pretty diligent about that, and that they are using that as perhaps a last resort. So they are trying to work out payment plans with customers that perhaps have issues with paying. And again, we're not really talking about material numbers. I think historically for JEA, your bad debts have been significantly less than 1%, probably around 1/4%. And I think as a result of COVID, that's spiked, I'll call it, maybe to 2%. So of accounts receivable. So again, we're not really talking about overly material numbers from an external perspective. Of course, it is something that I know you all need to keep your eye on, but I will say what JEA is doing is consistent with what the other larger utilities in the state are doing. Okay, so I had already mentioned about the involvement of the council auditors. So again, these are the areas that we will use them in. Tested transactions, which will include things like cash investments, capital assets, and expense testing, as well as officers and management travel and entertainment expenses. And of course, in reviewing that, what they and we, of course, are looking for are the business purpose of the expenditure, as well as proper approval of the level of authority for approving those types of expenses. Next slide, please. And one more. The next several slides just are the new GASB pronouncements. These are the GASB standards that have been issued but are not yet effective. This is really in here for your information. As I previously mentioned, there are none that are effective for fiscal 20. You'll see one of them will have a fiscal 20 effective date, and that was just the standard to defer by 1 year all of the other standards. So that is the only one that was effective for this year. The first two on this particular slide on fiduciary activities and leases, those are, out of all the standards that have been issued and are not yet effective, are going to be the most significant ones to your external financial reporting. GASB 84 on fiduciary activities is going to result in the frozen St. Johns River Power Plant pension plan, as well as JEA's other post-employment benefit plan, statement of net assets, and their operating statement to be included in the financial reporting of JEA going forward, starting with fiscal 21. Those currently are not being reported as part of the reporting entity of JEA. So that will be effective for fiscal 21, next fiscal year. And GASB 87 on leases, which will be effective in the fiscal 2022 year. That standard effectively requires all leases, of course, subject to materiality, to be reported on JEA's balance sheet or statement of net position. So again, we are working with management. We typically, these standards have been issued and have been out there for about 2-3 years now. Once they're issued, we have started working with management to develop an implementation plan for both. And management is about where they should be at this point in time for both of those standards. So if you can fast forward now a couple of slides, I'll let you know when you can stop, because I'm not going to go through all of these. They're really for your benefit.
John?
Yes, sir.
Before you leave that, I noticed that they're going to change the rules around capitalizing interest in construction projects. Is GAAP doing that as well, or is it just the government?
Right now, it's just the government. Of course, since JEA is a utility, that is an item that could be subject to rate making. So depending on whether and how that's going to be handled from a rate making perspective, it is possible for JEA to continue the process of capitalizing it, although it would not be capitalized to the fixed asset. It would be, capitalized as a cost to be recovered. But that is still an item that's out there. But right now, the private sector industry, they're looking at it, but they have not concluded yet on that.
Thank you.
Yes, Mr. Chair. So if we can advance one more slide, a couple more slides, one more, next slide, and on to the next slide. Next slide. So again, as I mentioned, these are the areas of audit emphasis that were listed out on a previous slide. And I'm just really going to hit some of the highlights of each of these. So in the area of revenues, our focus on revenues, of course, is that the transactions have actually occurred, that there's no fictitious revenues that have been recorded, and that the revenues that are recorded at the proper amount. So cutoff of revenues, which in the case of JEA, the focus is really on the unbilled revenue calculation that's performed at the end of the year. And that calculation is based upon approved rates and historical consumption trends. So as part of our audit procedure, of course, we are reviewing that calculation to make sure that the assumptions are reasonable, continue to be reasonable, and we actually perform a recalculation based on a hindsight review. Since we're doing our audit, a couple of months after the end of the year, we have the ability to look at subsequent bills and do a different type of a hindsight calculation to compare the unbilled revenue. So that is something that we do. We also perform analytical procedures over both revenues and the unbilled revenues. And as I previously mentioned, we do use our data analytic tool to audit revenues, all of revenues for the period, and that we are looking at 100% of your revenues and tracing them all the way through to ultimately a cash collection. I did share with Chairwoman Lanahan, at the end of the audit, in our audit results document, we will provide a single slide that will show how those revenues flowed through the accounts of JEA for the year. And we found a very high correlation, almost 100% of revenues ultimately being collected as cash. Next slide, please. Regulatory accounts, as you're aware, those are either your costs to be recovered by future revenues based on the rate making process, or those are revenues that have been collected and deferred because they have not been included in rates previously. So we're going to test the approval of any new regulatory assets or liabilities. We're going to verify that the amortization of those previously reported regulatory accounts are proper, and we're going to vouch or audit significant activity in those accounts during the year. As far as the derivative instruments and hedging activities, as you're aware, JEA does use derivatives to manage its exposure to changes in commodity prices and interest rates from time to time. The accounting for that is based on whether or not the hedges are effective, and that's specifically defined by GASB. The good news is to qualify for a hedge being effective, it's much easier to get there under the GASB model than the FASB model for private sector companies. So we do test or review management's tests for hedge effectiveness. We do confirm your hedging instruments with the counterparties, and we independently test the fair market values of those hedge instruments. Next slide, please. JEA's recorded 2 asset retirement obligations related to the decommissioning of the St. Johns River power plant and also part of the Shara facility, and that was done in the last year. These asset retirement obligations are recorded. They're recorded as a cost to be recovered from future revenues. We do use our internal specialists to review the assumptions that have been used by JEA in estimating those liabilities, and we do test significant activity during the year. Most of the assumptions and the original estimates of those liabilities are done when the plan for decommissioning the plant takes place. So most of the work we do is during that phase, and then we're just reviewing the activity year over year. And the activity consists of payments being done based on activities that are performed, and if there are any changes in any of those estimates that were made during the year. The very bottom of this slide deals with other post-retirement benefit liabilities. So those are benefits that are not pensions. So those would be like life insurance, dental, vision, etc. Health insurance provided to retirees. JEA does use an actuary to estimate that liability. We do review the assumptions and methodologies used by your actuary, and we actually use our own actuarial specialists to make sure that those assumptions not only are reasonable, but are consistent with industry. And then we also take a look at the assets of that plan. JEA does invest the assets of that post-retirement, post-employment benefit plan with the Florida Municipal Pension Trust Fund. So we do get a detail of those investments, and we do audit those investments, confirming them and testing the fair market value of those. Next slide, please. The first 2 items on here deal with pension plan accounting. JEA, as you know, their employees participate in 2 plans. Most of the employees participate in the City of Jacksonville General Employees Plan. Since that is what's considered to be a cost-sharing plan, meaning it's multiple employers, the City of Jacksonville actually engages auditors to audit that plan. And what those auditors do is they actually provide an allocation schedule to show what the account balances for both the statement of net position and the operating statement should be. And we go ahead and obtain that audited allocation schedule from the city's auditors. We also have our actuarial specialists review the plan assumptions just to make sure that they're reasonable for that plan as a whole, because JEA's allocation is only going to be as reasonable as those assumptions are. The other plan that JEA has is the frozen St. Johns River Power Park plan. And for that plan, JEA also engages their own actuary. And again, we do review the assumptions that are used by the actuary in estimating the net pension liability. And we do our own independent testing of the census data. Obviously, it's closed to new entrants, so we're really just looking at people moving into retirement, and that will ultimately be receiving benefits under that plan. And lastly, for the St. John's plan, we do test the plan assets. So the investments that are held by that plan, we are confirming those investments with the custodians as well as testing fair market value. Investments of JEA. JEA, as you know, the types of instruments they're allowed to invest in are limited by Florida statutes. So they're typically those items that have lower estimation uncertainty. However, we do confirm all of JEA's investments with the third-party custodians, as well as test the valuation of those. And when we test valuation, the fair value of those investments, we're using a different source than the source used to price those or mark to market those securities that are used by JEA. So we use a different source to make sure we get to a reasonable determination of fair value.
John?
Yes, sir.
Is it within your purview at a future meeting to dive a little deeper into the pension plan accounting and reporting, and so we can understand whether or not we're appropriately paid in and or have issues facing us?
Yeah, sure. To help you with some of that, if you look at the audited financial statements, there's some required supplementary information schedules back there. And part of those schedules show like the funded ratio and all of that information. So I think you'd find that information helpful. I'd be happy, outside of this call, Chair Baker, to review that either with you privately, or I certainly could do it at a subsequent, Finance and Audit Committee meeting at your pleasure.
Paul, could you send us the excerpts from the audited financial statements that go into that?
Yes, I will, Chair Baker.
And after we look at that, we can determine whether or not we need further conversation. Thank you.
Yes, sir. Next slide, please.
And John, the other thing I'd like to ask is, if you guys looked at Vogel and see if that's appropriately accounted for, reserves.
Yes, we have looked at that, and we considered whether or not, given everything that was going on the past few years, whether or not there should be any contingency or contingent liability that should have been recorded. And the conclusion was that at this point in time, there was not, because JEA's obligation really is just to purchase power and continue to support the construction activities. And we are looking, and I think there's debt service payments as well in the future. And that has not triggered yet. So there was nothing that needed to be recorded on the financial statements. Based on the settlement, we don't see anything changing with that. But obviously, there is a lot of disclosure requirements related to that, and we are reviewing that.
John also applauded our team for reaching a settlement on that, because it would have been a complicated footnote to address for sure.
Yes, that was really great. Certainly, that's nice to have that, at least the litigation part behind you. Obviously, there's a lot of future commitments, if you will, and those commitments, cash outlays in the future, are something that will need to be disclosed, although not recorded until those actually become effective. And just the top two items here real quick, since we already jumped ahead to Plant Vogel, but capital assets. JEA, as you know, has a significant amount of capital assets for its historical plant, as well as other types of capital assets. Because it is so large, we do look at significant activities. So we're looking at assets that were added, any disposals during the year, and we are reviewing depreciation for reasonableness, since it is similarly a large item that does get reflected on your operating statement. Asset impairments, I had previously mentioned. GASB is a lot easier to apply in looking at asset impairments. There has to be some evidence of like physical damage or change in service utility of an asset before you even consider whether or not there's an impairment. So as part of looking at COVID, that is something we'll be reviewing, but we're not aware of any asset impairments that have occurred at this point in time. And next slide, please. Next slide. This is just a summary of the services. This is what you or the prior Finance and Audit Committee had engaged us to do. And this is all of the opinions or reports that we issue. So we do express an opinion on the audited of the financial statements of JEA. We also provide assurance on the schedules of debt service coverage that are required under the terms of several of your bond agreements and debt resolutions. These other reports were required to issue either as a result of government auditing standards or the rules of the Auditor General in the state of Florida. And again, you can see them all in our previous audited financial statement reporting package. We include them all in one package. The last few items on the bottom really relate to the grant compliance audits that we do for federal and state purposes. JEA is still receiving some funding from FEMA related to the storms Matthew, Irma, and Dorian. So they are required, therefore, to have those funds audited each year or until they're all collected. As I've mentioned, we've audited those every year they've been required, and we have not had any instances of non-compliance, nor have we had any audit findings in those areas. The last bullet on this page, we are also required by the state of Florida Department of Environmental Protection to perform some agreed upon procedure reports as well on your storage tanks. Essentially, it's a financial net worth calculation. Next slide, please. Inquiries. Next slide. These are the inquiries that auditors are required to make of those charged with governance in organizations as well as members of management. So these inquiries I'm going to be making are not just for the Finance and Audit Committee members that are present, but also the members of management. So that would be Jody, Steve, I think Joe should be on the call. If not Joe, Brian also. So are you aware of any actual alleged or suspected fraud over financial reporting? Anybody?
Do you need us to go by one and say yes or no?
You don't necessarily need to go one by one. I mean, just, or you can do it on an exception basis. If anybody is aware, just kind of raise your hand and say something. Any awareness?
This is Jody Brexton. I'm not aware of any.
Okay, thank you. Any tips or complaints regarding JEA's financial reporting, i.e. whistleblowers that may have been reported? Those typically get reported through internal audit. But are you aware of any of those?
And John, this is Steve Tooten. No, I'm not aware of any such circumstance.
Great. And as far as oversight of JEA's management's assessment of the risks of the entity and the establishment of controls to address those risks, I'm not sure if the committee's had time to really have a sit down with management and or internal audit or myself over that, but that is something that should be part of one of the tasks that an audit and finance committee would undertake. JEA's management does have a formal risk assessment process where they go through and identify risks to the organization, not just of fraud, but there are operational risks and things of that nature as well. And then once those risks are identified, management will identify controls or policies and procedures to address those risks. So again, that's something just if this new committee has not yet performed those tasks or had those discussions with management, that might be something you want to include in your list of things to do at some point.
Duly noted. We will take that up at a future meeting.
And I'll be happy to assist with that or give you some ideas to where you could find that information, the types of things you would be looking for. As an internal auditor, Steve and his department also is very well aware of that risk assessment process and the controls and all of that. And I can help, as I've mentioned. And the last
and it may be helpful, Paul, to get that clarification from the rating agencies where they were identifying control issues so that we can incorporate that into the next conversation.
Absolutely.
Yep. And the last item here for the committee members present would be, your understanding of the relationships and transactions with related parties that are significant to JEA, and any concerns that any of you might have related to those relationships or transactions. The significant ones we're looking at as far as a related party goes, that would primarily be the Energy Authority, and whether or not JEA engages in any transactions with companies that, not just this committee, but board members, companies that they may be affiliated with. So as part of our audit, we do ask for a list of all those relationships. We are actually reviewing the conflict of interest statements for any things that are noted. And then as part of our audit, we are looking at transactions with any of those parties that may have been noted. Next slide, please. I promise you we're nearing the end. It'll be less than 5 minutes to finish up. Next slide. We're also required to provide you with a peer review report. The public accounting profession for non-SEC reporting entities we still audit ourselves. So our audit for the last 3-year period through June of 2019 was performed by Grant Thornton. We did receive, in essence, a clean bill of health that our audits follow professional and firms' policies, procedures, and standards. So we did get a clean opinion. We are required to provide this opinion to you, so it's included in this document for your information. And the next slide. And the last few items are just some required communications that I'm required to make during the planning phase of the audit. Relative to the terms of our audit engagement, those are covered by our audit engagement letter. That engagement letter was entered into when we originally signed our contract roughly 4 years ago. Management does have that engagement letter for your information if you'd like to look at it. I also would be happy to provide it to any members of the committee that would like to review that engagement letter, but that covers the terms of our engagement. As far as our overall planned audit scope and timing, I've hopefully covered that well enough during my previous comments and in the previous slides. There are no significant issues that we discussed with management in connection with our continuing or recurring appointment as your auditors, your external auditors. There are no independence matters to report where Ernst & Young would not be independent of JEA or management. I've already made the inquiries regarding the risk of fraud-related parties and the like, so we've already covered that as well. Next slide, please. This last slide is really for your information. It's just something that our firm puts together for all of our clients. It essentially deals with the strategic planning process that management should be undergoing, and what are some of the things that this committee should consider relative to that. So it's things like, planning. We had a very significant disruption due to COVID. What plans were in place prior to that? What were the lessons learned from that? And what updates or changes is management recommending, and procedures going forward should we hopefully not, but should there be another similar situation? So this is really just for your information to look at. Those are my planned comments on our audit plan, and I'll just open it up for any other questions that anybody may have relative to our audit plan or just the audit in general.
John, this is Jody Brooks again. On the inquiry that I said that I had no knowledge of any actual alleged or suspected fraud.
Yes, ma'am.
There is a provision. There is an active litigation matter against the prior CEO and there's a claim of fraud in that setting. So I do have knowledge about that. And so I needed to qualify my response to your earlier inquiry.
Great. Yeah, we're of course aware of that and monitoring that. I would say that's not something that would have a direct impact on financial reporting, though. But obviously, we are monitoring it because as of now, we don't believe there's going to be any, I'll call it fines penalties or anything else financial against JEA, but obviously it's something that we're monitoring. So thank you for clarifying that.
I just want to make that qualification that it should not affect the audit, the financials of
Correct.
of the organization. So thank you.
No, thank you. Any other questions?
Questions, comments? John, thank you. You did a great job consolidating your remarks. There's a lot to cover, and we've got a lot of work ahead of us. I guess
Great.
I will entertain a motion to approve the annual audit plan as presented by John and E&Y.
Move it.
Second.
Is there any further discussion? All those in favor?
Aye.
Aye. Perfect. Thanks
Great.
again. Now your real work gets to start.
Thank you. Yes, ma'am. And also I'll be holding on, of course, for the executive session at the end of the meeting. So
yeah, absolutely great. Thank you. Did we get Wallet back on so we can circle back?
Can you hear me?
Loud and clear.
No? Yeah, yay! I'm back in business. Sorry about that. All right. Thank you, Landon. Just to start off, as I mentioned earlier, one of the things I wanted to do based on some of the comments and feedback from the last F&A was to kind of set the framework of what we're doing to address some of the ethical risk situations that occurred previously and how we're trying to revisit those things and see what we can do from the organization. So one of the two key things that I wanted to look at were the two important assets of our company, which is our reputation and the trust of our stakeholders. So what we've been working on the last few months is looking at pretty much 5 key steps to help determine how we address these risks. And that's really looking at some of the resources that we have, establishing a strong foundation, building our culture of integrity from the top down approach, looking at our core values, and then just making any adjustments as we need to. So next slide, Landon. So part of that is elevating our ethical culture, or as Marty mentioned earlier, maybe double down on it. So to help determine what we can do to do that. And one of the things that we've done is we've done several key things. The first one around setting expectations. A lot of that has been driven off of messages from Paul. He's done a phenomenal job of including some CEO messaging, helping us create some of our ethical policies, and then even the message from the board around what's acceptable behavior and what's expected of us here at JEA. In terms of modeling those behaviors, we've had our senior leadership team and our executive leadership team sign off on our ethics policy so that they understand what that desired behavior is and how they're expected to model that. Reinforcing that in some of our short-term strategies, getting input from our employees. We've been doing focus groups with employees to really understand how they felt about what previously happened and what they think we need to do to elevate the ethical culture here at JEA. Doing some problem solving around educating. We've got some upcoming training that we're putting together, providing tools for the employees so they know how to access the hotline or any other resources that are available. And then just getting feedback as we get new input from employees and assess some of the tools we put in place. How do we continue to make those adjustments and changes? Next slide. All right, this is around the code of ethics. As mentioned earlier, we have the code of ethics that's been rolled out to the entire company. It currently resides on what we call our policy tech, which is our company-wide policies and procedures database. And I've just put the key points of what's in the code, but it is a full-length document that really highlights what the behavior is we expect. And we've highlighted strongly to employees the piece on reporting of retaliation, that any type of retaliation will be investigated and handled, and we will not accept that at all. Zero tolerance for it. So we want to keep emphasizing that to employees so they understand that they can come forward if they see anything or perceive anything that they find is unethical in the company. Next slide. All right. This is an excerpt from what you, the board, had put out that I want to just highlight when I say the tone from the top is the piece that specifically talks about the process begins today with our commitment to transparency, collaboration, and efficiency. So making sure that we understand that what is expected and what our senior leadership team and board will support us and city leaders as it relates to understanding the values of what's expected here at JEA. The other piece I wanted to talk about was just highlighting some of the things that, in addition to what I've mentioned, some of the timelines and things we put in place. Again, the ethics policy was rolled out on June 5th. We put our code of conduct out there on our intranet site and introduced that to employees so they understand what the conduct is expected of them here at JEA. We've expanded on our core values as it relates to including dignity, respect, and moral character, which are very key around ethics. I mentioned earlier around our training, I'm working with Carla Miller, and we are putting together training for our managers, especially those that have direct reports, to really emphasize, because a lot of the reporting comes to them. So we want them prepared so that they can share with their employees and reinforce the piece around coming forward with any information and the piece around retaliation. In addition to that, just a few other things that we've been working on. One of the other pieces that I'm responsible for is what we call our exit interviews. So as we have employees leave the organization, either for retirement or resignation, I speak with them and I ask them some key questions around the culture of JEA. And I will tell you, the ones that I've done probably the last 2 or 3 months have been very enlightening, delightful in terms of how people feel, what has transpired here at JEA, how they felt uncomfortable about it and didn't know what to do. So we want to continue to have those conversations with employees so that we can begin to put together some mitigation around the risk of ethical behavior. Next slide.
Pause you, Willette, with that statement and ask, with those exit interviews, are they feeling like we've moved in the right direction recently? I mean, I'm hopeful that they feel that we have.
Yes, they have. They definitely have. Many of them are very happy to see our current executive leadership team. They had a lot of fear around the previous executive team, not understanding from a trust standpoint, didn't feel that there was a lot of transparency going on at JEA and didn't feel like they were in the dark, and they felt like they weren't getting any information on what was happening in the organization and things were happening too fast. I think I already covered a lot of these things on here. The other thing just to highlight that I think I didn't cover was I completed my leadership and professional ethics and compliance certification. I want to make sure that I stay up to date in terms of tools and things that from an industry standpoint that we can be implementing here at JEA, because it's very important for us, especially now around our reputation, to elevate our ethical behavior and culture. Next slide. This is just a snippet of the communication that Paul put out to the senior leadership team and the executive leadership team prior to us signing off on the code of ethics, and what his expectations are and what he expects us to help in terms of supporting this from a management standpoint. It's going to be key that our management employees help us in terms of being role models and providing the tools for our employees that are needed to continually elevate the culture here, because he can't do it alone. The senior leadership team can't do it alone. It's going to take all of us. We all own making this a priority for the organization. Next slide. Again, another snippet from what he put out on what we call our grid, which is our intranet, in terms of what his expectations for 6 months. We know Paul's not here long term, unfortunately, but for the short term, we're going to take advantage of him leading us to help restore ethics here in terms of us being public servants and people really understanding what that means and what the expectations are around rebuilding the trust in the community for us. Next slide. Now I'm going to get into just a little bit of my normal case update. Year to date at 57 cases. This past quarter, 15. As you mentioned last quarter, Marty, the numbers were low, and they're still low. I think it's going to take time before people start to come forward. People are feeling a lot better, I will say, around the leadership team. So I'm hoping over time they will. And as we educate them on coming forward and they don't feel fear of retaliation, we will begin to get more information. Because most of the information that we receive in terms of tips come from managers and from the employees. And as I listed over to the left of the slide, that 64% of initial reports of misconduct come, employees go directly to their supervisors and managers. So that's why we're targeting them to train myself and Carla starting next month to begin to put together training for them to get everyone trained by the 1st of November to ensure that they understand what to do if an employee does come forward to them. Next slide. In terms of the inquiries, as I mentioned, I had 15 the last quarter. Majority of them were pretty much miscellaneous type input inquiries, and they dealt with HR issues that, of course, I have to hand off to HR, but I do listen to the inquiry and make sure it gets to the right person in HR, because a lot of times they don't know who to go to. Dealing with management issues, addressing those with employees. And one that you would not be surprised going on right now is political campaigning. That's always comes up around this time of year about people seeing pamphlets in different workplaces on cars, trucks, questions around what they can and cannot do as a public employee. So I address those issues as well. Next slide. And this one, I probably won't include this moving forward, especially under COVID situations. As you can imagine, I'm not getting any in-person inquiries being reported. So, of course, most of them are through email or phone. Typically, it starts with the email, and then I'll follow it with a phone call just to make sure I've addressed their question and concern and make sure they clearly understand what next steps look like in terms of their inquiry. Next slide. And this just highlights some of the training that's going on. As I mentioned earlier, I'm working very closely with Carla Miller over the city of Jacksonville, and we're going to put together a training for all of our managers and their who have direct reports, and our goal is to have them all trained by November 1st. And that training is going to be around ethical leadership, their commitment to promoting and upholding workplace integrity and the organization's standards and values, and what their role is in terms of leadership as it relates to us achieving our goals here at JEA. Because in order for us to be successful, it's going to take all of us. It's not just the SLT, it's not just the extended leadership team, it's everyone has to take ownership. And this fourth quarter, we highlighted the last of our ethics topics. This chart here is what was provided from the City Ethics Coordination Council that I'm a part of. And the fourth quarter, we did travel paid by third party. We're not having a lot of travel paid right now, as you can imagine, but it was the last topic, so I wanted to get it done. So we will not be looking at any of these topics moving forward. We'll come up with some new ones, and I'm working with Carla on the things to highlight. But quarterly, we put out some type of ethical communication, and this fourth quarter topic actually went out yesterday to the entire organization. Next slide. Just want to highlight what's next. We have a lot going on. One of the key things is looking at our hotline. A lot of our calls come through our hotline, so we're looking at how do we receive those cases, and me taking more of an ownership role as it relates to the ethics cases that come in the hotline, so that I can be aware of the type of cases, calls we're getting, so I can help address those things and help with some of the mitigation to put in place for those. Secondly, we're working to look at our hotline system. We currently have a system called Alert Line where the calls come in through the hotline. There is a more upgraded system that's out there with some expanded functionality that me as the ethics officer could utilize. So we're looking to upgrade that and putting together a business plan for something for next fiscal year to look at upgrading our system, which will allow us also to use employees to send inquiries via the app or through email versus just phone calls. Next, continue to look at some of our controls that we have in place and how we can look at some of the things that our peer organizations are doing or utilities are doing as it relates to ethics. So I'm partnering with some of the my peers in the industry that I've met over the years to see how we can strengthen ours. And maybe they've had similar challenges that we're facing right now and how we can share best practices. And then lastly, just looking to put together a strategy for FY21. As we move into the new fiscal year, what do we need to do to kind of continue to elevate the culture here at JEA? And then last slide, it's just, next slide, please. It's just one of my favorite quotes from Dennis Thompson that I wanted to share around, and I kind of felt like it kind of leads to where we are right now. For those that don't know, Dennis Thompson is a professor at Harvard University. I know Carla Miller loves him. She speaks of him on many occasions. I think she's heard him speak before on some of the training she's done, but he's a pioneer in terms of the work in both around political ethics and the democracy theory around ethics. And so this is just one of his quotes that I wanted to highlight in my presentation today. So that ends it for me. What questions can I answer? Or are there any questions?
Well, what can we, I mean, we made a statement back in April. What can we as a body do to support you with your cause and in getting folks, you know, I'm going to say to trust us again, because I still feel like if this was not a time of COVID, that we probably as a board would have been more visible. We would have been more accessible to staff. Is there anything we can be doing now to help you with your efforts?
Nothing that I can think of, Marty, aside from maybe just keeping the employees updated around communication. I think that letter that you guys put out early on was really key. I think employees appreciate hearing from the board. They like the leadership in terms of Paul communicating, being open and honest, even when it came to the pay for performance. I just think that employees want us to be more transparent. They want to know what's going on, and they want to know that they are supported throughout this transition that we're going through.
All right, perfect. I will look for you and Paul and staff to kind of direct us as we move into the future, because this is one of the most important things. It's so foundational, and it's so part of that lessons learned sector that we were talking about with Bobby. So I think more to come on this.
Hey Marty,
Absolutely.
it's Tom Van Oswald. Real quick, just a thought for consideration. It may be an opportune time for a follow-up letter from the board to all of the associates, and even what you just stated, you know, just our deep appreciation, respect for all the work that all the men and women do, and the fact that were it not for the restrictions of COVID-19, we would love to have been more visible with you up to this point, but know that insofar as we can't do that safely physically, we're there with you in heart and spirit and supporting you. And as soon as it's safe and appropriate to do so, we intend to be more visible with you. It might just, I don't know, just a thought, it might be a time to sort of express what you just said. I think resonated really well, and I think it might with the employees as well.
Yeah, thank you, Tom. I'll let Paul and Chair Baker kind of talk through what that letter should say. But I just think, you know, people feel isolated during this crazy time of COVID anyway. So anything we can do to communicate right now, I think is good.
I agree. The tone from the top.
We'll do it.
Great, thank you. Any other questions or comments? Tom, it's good to see you join us. Thank you. For Willette. All right, thank you, Willette. Keep doing a great job. And we'll move to the reserve fund report. And Joe.
Good morning, Madam Chair and committee members and participating board members as well. If you could go to the third slide, please. Thank you. No, you were on the correct one. So there you go. Thank you very much. For those following at home, we're on slide 98 of the PDF package. This report's provided for transparency and full disclosure about all of JEA's reserve funds Each fund supports bond resolution requirements, credit ratings, or operational needs. Reserve fund balances also support maintaining metrics required to keep our credit rating stable and our debt costs low. Comments specific to the electric system: the fuel rate stabilization fund balance ended fiscal year 2019 at approximately $47 million, with no recommendation to either the fuel rate or the rate stabilization fund balance. As noted on page 5 of the report, the fuel fund balance is projected to increase to approximately $82 million by fiscal year 2020, including the impact of an approximate $23 million fuel rebate to our electric customers during the months of May and June. That was largely during May, but there was some spillover into June. The Fuel and Purchase Power Committee met last week and is projecting a slight decline in that $82 million to somewhere in the $77-78 million range, but still above the required target, which is approximately $68 million. We utilized approximately $30 million in the debt management strategy rate stabilization fund, in part for the phase 2 debt defeasance that we accomplished in October of 2019. The non-fuel purchase power rate stabilization fund reflects the funding of approximately $20 million in principal payments on MEAG Project J bonds prior to the projected in-service dates of November 2021 for Unit 3 and November 2022 for Unit 4. Days of liquidity in the electric system is projected at 345 days at fiscal year end 2020. That figure remains comfortably above our pricing policy target range of 150 to 250 days. And in the restricted fund balances, you'll notice that the projected approximate $59 million reduction in the debt service or sinking fund balance reflects lower upcoming principal payments in the electric system on 10/1 of this year, October 1st. In water and wastewater, similar to the electric system, we utilized approximately $14 million in the debt management strategy rate stabilization fund, in part for the phase 2 debt defeasance that was accomplished concurrently with the electric system defeasance in October of last year. Days of liquidity projected at 347 days at fiscal year end 2020 is also significantly above our pricing policy target for water and wastewater of at least 100 days. Similar to the electric system and the restricted fund balances, the projected approximate $37 million reduction in the debt service or sinking fund balance also reflects lower upcoming principal payments in the water and sewer system on October 1st. Further, the projected drop in the renewal and replacement fund balance, or what we call R&R, to approximately $30 million is a signal of our upcoming need for new debt to fund the capital program in fiscal year 2021. Brian Roche will get into that in more detail in an upcoming presentation in the next few minutes. I'll note that figure was projected to be only $4 million in my last report, but through refinements to capital and O&M that Paul talked and Brian talked about and initiated, we've seen a $26 million increase in this forecasted projected balance. So with that, I'll entertain any questions.
Any questions or comments for Joe?
No.
All right, great. Thank you, Joe. We appreciate everything you're doing.
Thank you, Madam.
And we will pass to Brian for the water, wastewater cost of service and rate update.
Yes, and then thank you, Committee Chair Lanahan. Just time check. I believe we have a hard stop. You have a hard start prior to 12 o'clock.
That's correct.
So we'll have to squeeze a little bit in the next few presentations for all of us. The two that I'm doing are both very important presentations and information. They are preliminary, though. We do plan on coming back to the board over the next several months. So we have to cut an item short or two. We'll be back the next month or two.
Yeah, thank you, Brian. Yeah, no, thank you, because I want to make sure that the board has time to go into an executive session with our auditors at the end of the meeting. So This is important stuff, but it's not an action item. So anything you can do to expedite the conversation would be appreciated.
Yes. Next slide, please. So a year ago, the team finished a cost of service study on water and wastewater. About every 5 years, according to our pricing policy, we do a cost of service looking at revenue requirements, class allocations between residential, commercial, multifamily. We look to make sure there's any deficits between those classes or surplus that are too wide. You might make an adjustment between that. You look at bill comparisons. If you make an adjustment of rates, what does it do to different customer consumption and classes? Rate benchmarks, how you look to compare to your adjacent utilities and utilities across the nation. You also look at capacity fees and meter set fees. JEA has not done any adjustments to that since the early 2000s, so almost 15 years ago. And I believe, Committee Chair, you might have been the chairperson of the board at the time. So we're going to talk about that today. And if you do that, there's a process. It's a multi-month process through rate making, rate hearing process that we'll just touch on today. Next slide, please. So on a high level, the cost of service was done called revenue requirements. How much money is needed to operate the utility currently and long term on capital funding for R&R and maintaining our city contribution, debt service payments, and all the other requirements. So this was done in a 2018 budget figure using 26 billing analysis between the class. So several years old data, typically it might be 1 or 2. So we're looking at updating that over the next few months on the specific items to capacity fees, because that is the item that we'll talk most about now. In context, the non-capacity fee or the monthly bill generates, an example at the bottom right, you have water, an average customer, a 3/4 inch meter, 6,000 gallons is $26.70 a month, sewer is $53. Adds up to be approximately $80 a month, times it by 12, about $950 a year. That is the average residential bill for 3/4 inch meters. I'll touch on that a little bit. The slide the inset chart on the left shows about $40 of that $85, including tax. Almost 50% of it is through the fixed monthly fee on that size meter. Different size meter services will have a little different breakdown between fixed and volume. Large commercial customers pay more based upon volume. Typically, they're using a lot of consumption like a manufacturer. Overall, the revenue requirement for the monthly bill was $378 million. Not so important at the moment, except to tie it to the next slide. Next slide. So when we looked at the different classes, you can see the $161 million on water and the $224 on sewer highlighted. That adds up to that $387 monthly bill requirement. This is not for upfront capacity fees or meter set fees that are paid typically by developers or builders or owners when they have new construction. So the monthly fee, and it looked at the summary there is multifamily from this analysis was slightly undercollected. Commercial customers at the $63 million of revenues was slightly overcollected. And then sewer surcharge, it was a very complicated subject on industrial sewer surcharge was undercollected too. One thing to note, those numbers, well, 20% undercollected percentage-wise, multifamily is a lot. And we will continue to look at that over time. A lot of utilities don't split out multifamily anyway, so apartments, they kind of view commercial and apartments together. So that one specific in the moment is not an item that we have to address immediately, but we will keep an eye on that and look at that more as we go forward. So turn to the next slide. Just looking at our rate benchmarks, we did show it last month at the board presentation, historically every month for decades. What we look at in our monthly residential water bill at a 5/8 inch meter, 6,000 gallon consumption, that is what most utilities compare across the state. So we're using that. On the bottom, it's, I'm getting hit with my WebEx notes there, but I believe it's 120,000 5/8 inch meters we have in our system now. JEA quit or stopped putting in 5/8 inch meters in the late 90s. So those are mostly systems that do not have in-ground irrigation systems. In the late 90s, the standard moved to a 1-inch line feeding houses and a 3/4 inch meter. At this point in time, we have about 160,000 3/4 inch meters. So from a 3/4 inch meter, our benchmark, we would be a little bit on the right-hand side of the median, a little bit higher than median. At the 5/8 inch, which these are all compared to, we're a little bit on the left. So it's not a perfect benchmark. So we did want to show that since we're kind of a hybrid between the two comparative utilities. So on a monthly bill, we're fairly good shape. We've been moving to the left over the last decade. JEA was on the right-hand side of that 8, 9, 10 years ago. And we've been moving, other utilities have been moving up. And we'll have another slide next presentation. Water rates have not been adjusted in almost 8 years at this point in time, but fairly good in the median. Next slide. The capacity fees. So electric is a little bit, or water wastewater is different than electric. In electric, infrastructure growth is paid through your monthly charges, whether that is a commercial customer through demand charges or a residential customer through consumption charges. But water sewer is a little bit different. Remember, we only had $950 a year coming in for a normal residential customer. But a new connection to a house in a development, it could be upward of $7,000, $8,000, $9,000, $10,000, depending on the situation. So that would be like 10 years worth of bills just to pay for connections. So the water sewer system on site, you look at the little insight graph that we use for, this was actually used in a septic tank phase out presentation a few years ago. The housing in the neighborhood, that is paid by the developer. Off-site direct extension, the pipes and the pump stations to feed that specific development, a 12-inch line or 8-inch line to get to that development or pump station for 100, 200 houses is paid by the developer, owner of the development. But off-site joint use, these are large wastewater treatment plants, 30-inch lines that we have for transmission purposes. Those are paid through capacity fees. And then JEA invests that money, collects capacity fees over the next decade to pay back the usually debt service on that amount. So what we're talking about today is the one-time fees that are paid by new customers when they connect to the system. The next slide, Landon, please. This is, I probably should have drove an envelope around the top half. If you do an envelope calculation, which really what it is on the top half, is but it's very accurate. Current JEA capacity fees. These are rates in our water sewer rate document or our tariff. For every gallon per day average, the charge is 97 cents. For sewer, it's $3.64, and reclaimed water 97 cents. So if you look at a normal house, it utilized 350 gallons a day times 97 cents gives you $340 capacity fee. Water sewer was 350 gallons per day times 364 and give you the 1,274. So we're kind of summarized in yellow. If a new house with reclaimed water, which is over half our new customers have reclaimed water, which is a great thing. If you don't, if you have in-ground irrigation, you're going to pay a little bit less, $1,600 capacity fee of a single meter. But you're $1,900 in yellow. That is the amount that is charged, and it's been the same charge for almost 15 years. If you look at what it's costing JEA right now in plant expansion, if we build a new plant, a new wastewater, new water plant, it's $4 a gallon for water, $15 a gallon for sewer, $3 a gallon for reclaim. You look at the 15 and 3, that's $18 a gallon. We've actually seen costs come in on estimates the last year or two that are 50% higher than that. So being fairly hopeful that we can get our costs down in our engineering and construction industry back down to numbers like 15 and 3, which are still significantly higher than they were several years ago. But if you look at that cost, we have lowered the gallons per day. We have lowered the gallons per day to 200 gallons a day for water because people are more efficient than we were 20 years ago. Sewer down to 200. So you take $15 times 200 equals 3,000. Reclaim the same. Actually, reclaim is more of a 420 gallon a day average people use for irrigation. The difference is over 2.6 or 2.7 fold what it's costing just to expand plants with very hopeful construction engineering numbers compared to what we're collecting. The number in blue to highlight the difference, 6,755 is added another item called growth line extension fee. Those are for the large transmission lines and the storage facilities. They're not just plant construction. So that cost at minimum is $6,800, $6,755. The cost of service that was done a year ago put those two charges together, and the bottom came up with $7,800. So if you look at it, we are anywhere from $3,000 to $4,000, even up to $5,000 per residential connection under collected according to current charges. Now, that is all preliminary. They're good numbers, but we're going to refine over the next month or two. We've rehired the rate consultant that hadn't worked with us for a year to kind of polish up this component of their work, and we'll be back over the next month to have more fine supported information with that. Next slide. Just to show benchmarks of where we are to other utilities, our current capacity charges, counting the main extensions, are about in the $3,700 number. So there's about 10 or 12 utilities that are left that are in the $3,000 to $4,000 range of the median. There are another 5 or 6 that are right in the median. They're over $5,000. And there are a few, if you use the Stantec cost of service, close to $8,000. I'm not saying we are going there, but that's what the cost of service showed a year ago. That is on the far right-hand side of the benchmarks with different utilities across the state. So it's a situation we need to talk about, discuss, get some guidance, and move forward in a very meticulous way. Next slide. When we do that, we'll touch on some other charges like meter fees, meter tap and set fees. Really, it's pretty simple. Our current fee on the right is in green, $202.33. Been that way for 15 years. Our cost is over $300. Our tap fees, and we do 10,000 those a year. So you're uncollected $100 times 10,000. That's $1 million a year. And then the tap fees, which these are not for new neighborhoods. These are more one-off and two-off houses typically. That we charge $600 for any meter that's 3/4 inch or 1 inch, and the cost to do that is at least $1,200. So there's about $1.5 million under collected in this situation for meter tap and set fees also that we need to further discuss. So to summarize where we want to go with this is, next slide, please. You know, we just briefly, very quickly, sometimes I can talk a little too fast. I think today I needed to, so I apologize. We went over an overview, just an introduction of this subject because it's a very important one. We'll confirm our benchmark comparisons with other utilities. We'll do this capacity analysis over the next month or two to update with FY 21 to 25 capital costs, not 16 and 18. We'll the meter tap fees, we'll just make sure we put a pen to it versus a pencil. We'll have board discussion, outreach, communication. Staff will have some recommendations for board to consider, and then board will, if they decide for us to use the board, the full board decides for us to move forward, we'll go through a public hearing process.
Brian?
Any questions or suggestions?
Brian, if you went to the surrounding counties' cost, if you increased the surrounding counties, what would that do for you comparable? And would that get you where you want to be?
It would certainly move it a lot more into the middle, and I think that is the benchmark into surrounding counties is essential. And rate making is not just math; it is 7-8 principle fairness. You don't want rate shock. You have to look at comparisons. So I think that's a great comment. I think that was Board Member Stein, and we're going to refine that and make sure that we are apples to apples comparing those figures. Our initial benchmark shows that would move it up several $1,000s, I believe.
Well, and having been through this conversation on a previous board with this organization, I think every board member needs to have a full briefing of the impact. And I think we discussed that a couple weeks ago, and we knew we were going to have this agenda item. So let's make sure that every board member understands what the path forward looks like.
We would do that, yeah. Because Nassau is about the same as St. Johns County's. We're looking at it's about $1,000 more a house at the moment. But there's different type fees that different counties have, so we're going to refine that and make sure we have most accurate, updated information.
Great. Thank you. Any other questions for Brian on this matter? And Paul, I'm looking at the calendar. We knew we were kind of putting a lot into this meeting, and as expected, we're running a little bit late. And I really want to make sure we get to executive session with our auditing partners. So any recommendations?
My recommendation, Madam Chair, would be to just take really 1 minute and point to several schedules, not necessarily talk about them, but point to several schedules. I have page 142 in the diligent board book, and it's called Key Financial Metrics. And just point out that the 5-year view or financial plan that we've put together, the preliminary view, does drive all of our financial metrics to a level that supports our current rating. And that the next page there is some schedules, one for electric and one for water sewer, that talk about the potential revenue requirements in 23, 4, and 5 for the electric system at 1% per year. And that's where we've got to just come up with that funding. It's about $12 to $15 million a year to balance out the projection, and a 2% revenue requirement out in 2025 for the water sewer system. Both of those reflect a substantial increase from what had been communicated to the board and the public in the prior year. So we'll continue to refine that. The next steps really are to come back in October with a full view to the board of what we would look to bring to the rating agencies for a financial and operating review in the month of December for that annual review. And that'd be next up. And then I think we can just, we can move on to the rest of the schedule, Madam Chair.
Okay, thank you, Paul. And our Finance and Audit Committee doesn't meet until December, so I might beg a little bit of time on the regular board agenda in the future to cover some of these items, because it's ultimately the entire board needs to be aware of those two matters particularly. All right. So thank you very much. Sorry, Brian, that you don't get to use your script on the 5-year projections. I apologize.
We usually don't come to October anyway, so we were coming early. Thank you.
Okay. All right. Great. Thank you. And then, Paul, for Ricky, risk management, can we make that one quick?
Yeah, I think, Ricky, from that standpoint, I'd just say on an exception basis, I don't think there's any, there's nothing remarkable or exceptional. What we would review is just the standard hedging on natural gas that we saw the last time. There's been movement in the market, but the hedges are all favorable, and that we continue to look out and lock up our coal and pet coke requirements for Northside 1 and 2. And so I think that's a general summary of the report. It's all there for information, but in terms of anything that might be exceptional or remarkable, there's really nothing to report. It's consistent with what we reported last time.
Well, there was a lot of green and, more importantly, smiley faces on page 147. So
yes.
That not much to talk about when it's all smiles. Yes.
Marty, yeah, before you get into executive session, I just want to make sure that bring one thing up, and Paul and I have talked about it, but I think it's very important. On Plant Vogel, I think we need an outside study or an outside consultant to look at, where they are on the completion date. I just want to make sure we understand and I think it is financial and where we are in this Plant Vogel. I think Paul and his team did an amazing job to get this thing settled. I just think we've got to have a better understanding when this thing will be completed. So I think it's something you and Paul should talk through about getting somebody outside to look at when we're looking at completion.
Okay.
I'm happy to take that on with Paul.
Excellent.
All right. Thank you. Anything else? This is a little awkward because we're still going to be operating in the sunshine, obviously, but we're going to ask, I think, Landon, you can stay, and we're going to ask the leadership team to drop off so that we can go into executive session with our auditors.
Thank you, board members.
Thanks, all.
Well, thanks for your leadership.
Thank you.
Y'all are doing great work.
This is Landon. Just to confirm, does this still need to remain on the live stream online?
Yes, it is. This is subject to the sunshine, so absolutely.
Just wanted to make sure. I'll leave the recording on, and we will continue to stream.
Great. Thank you so much. Transparency is important, Landon. So the committee, I think, have we dropped everybody off on ELT, Landon?
I'm still on.
I'm gonna take a quick look.
Want me to drop off?
I need John and Steve and Jeff, if the council auditor's on.
And you, for those that are on the senior leadership team, do you need me to make sure that they're off the meeting?
I'd like to, yes, just because it's technically.
Okay. I see Steve Tootin still on the line.
Steve is okay. Steve is fine.
Steve is okay.
Mm-hmm.
The executive assistants for the senior leadership, do they need to still see some of them in the meeting? Would you like me to remove them or allow them to stay in the meeting?
Let's remove them.
Okay.
Oh. Other than Madrika, who's taking minutes on behalf of the board.
Okay. Okay. So Madrika, please stay. I will not remove you from the meeting.
Sorry, guys. We hadn't rehearsed this one as well as we had rehearsed the shade meeting.
No. A little different. The shade meeting, everybody else had to move out. So, okay, I'm just going to do a quick roll call through this to make sure who's all supposed to be in this meeting. I have myself, the technical team, Bobby Stein, General DeSavo. I do have a WebEx 38 that I'm not aware who that individual is. Mr. John Baker. I have Jody on the line. John DeSanto is on the line. Latrice, yes. I'm assuming Latrice needs to be also removed from the meeting. Is that correct? Okay, yes. I'm going to go ahead and remove her from the meeting. Marty, Ontario, Steve, and Tom Bindall. Okay, I think we are good to go.
All right.
So I'm going to have the technical team stay with me online. Is that okay?
Yeah, that's fine. Okay. Yep. Thank you so much, Landon. And I'll go ahead and call the executive session of this Finance and Audit Committee meeting to order. Obviously, this is our time to talk to our auditing partners as we move into the audit plan that we just approved. So I'm going to start with John with E&Y and see if we as a body have anything that we want to discuss with our auditors. And I'll remind everybody of something I said earlier, which John will be meeting regularly with our management team. He and I have made an agreement that I don't have to meet on those weekly meetings, but that he will give me a call if there is something that he determines is material and of concern. John, since there's no questions, I do think it would be helpful for you to go through with the board the conversation that you and I had regarding the financial reporting, that the controls were in place appropriately for the financial reporting based on, kind of what we had gone through as an organization last year, because we had some good dialogue around that.
Yeah, I definitely think that's fair and appreciate the opportunity to do so. One of the things that I think is important to share with the committee is that when you look, behind or beyond the executive management team, most of the folks that we're dealing with and that actually do the day-to-day accounting stuff, we found them to be historically extremely competent, adhering to controls and policies and procedures. We have had some management letter comments in the past, but nothing that rose to the level of either a significant deficiency or material weakness as the standards define them. And typically they were around accounting for what I would say are complex, non-routine transactions, like when new pension standards were required to be adopted, or the new asset retirement obligation for the decommissionings was effective. Management needed some help, but in their defense, they certainly reach out to us in advance. And as I mentioned, we do, as soon as those standards are issued and long before they're effective, we start working with management as to what they need to consider, think about. Obviously, since we're the auditors, we can't do the accounting for them. That would be an independence issue for us to develop numbers that we then would be auditing, but we certainly have the conversations with them, look at the work plan, etc. That the finance and accounting area, a lot of CPAs, folks who have been with JEA a long time. And again, generally, I would say that they're, probably one of my, highest rated teams of most of my clients.
You would expect nothing less. John?
John, if you were to rate JEA as an organization about being aggressive or overly conservative or right down the middle with financial reporting, how would you?
Yeah, I think that's a fair question. I would say JEA really tries to come up with the best number or the right answer with a tilt or a lean towards conservatism from a financial statement, financial reporting perspective.
And do you have any problems getting cooperation from management?
No, we do not. We have never had any issues with that. Again, we're dealing with folks below the executive management team usually, and we have a great working relationship with them. The quality of what we receive to audit, like supporting schedules and the like from them, it's of the highest quality. Generally, they tie out to the trial balance or the general ledger. I mean, they generally do a really good job for us.
Thank you. That's great.
Yeah, good group you have back there. Quite honestly, a very good group.
Any other questions for John or comments? All right. Thank you very much, John, and I look forward to working with you through this process.
Same here. I'm looking forward, of course, to working with the new committee, and appreciate it. And I'm available for all of you. So any time you want to reach out to me, I'll say privately, but independently, I should probably say. I'm here for you guys. So feel free. Thanks.
Great. Thank you very much. So Steve, internal audit is, I was kind of surprised we don't do any unscheduled. Scheduled audits are kind of telling everybody, hey, we're coming, clean up your act. Have you ever considered doing unscheduled?
Well, I mean, I know actually most of my career in audit was in financial services, so I know a lot of you speak like the surprise cash counts and at the branches and so forth. But yeah, we did more of that in financial services. We always like to say we hold back, I call it dry powder hours for projects, just for the fact that the hours we have available to our team. We don't want to say we're doing all audits. So even though we don't have a audit that is per se unscheduled, we have the resource, the hours available to do those unscheduled audits. It usually is based on, although I will say that the forensic team kind of does more of the investigative work. So if we see something from a severity of control weakness on our internal audit, we usually defer that project in a lot of cases over to the forensic investigators because they have the, they dig in even deeper, I think, than our internal auditors do. So we have a couple ways of tackling those unscheduled audits. We probably just don't call them that like we did in financial services.
Okay. All right. Great. Thank you.
Marty, I've got to drop off. Thank you for a great meeting.
Okay. Thank you. No, I think we're in good shape.
Great job.
And I do want to mention that I don't know if you saw it on our 2021 audit schedule. We are, after so many years, finally getting back up to do another audit at Vogel. Gosh, it's been like 8 years before I even got here. But then there was never a lot of, I guess because it was what's the word I want to use? A contentious relationship with the folks with MEAG and so forth, even going back before the litigation, that, we wanted to kind of, auditors obviously are not necessarily welcome per se, but we always wanted to make sure that, when we got there would be constructive, well-spent time. So we spoke, Lee and I spoke with Paul when we were doing the survey earlier this year, and we said, it's probably time to go back up to Georgia to look at the Vogel operation. So he agreed. So we're going to go up there later, in the new fiscal year. So anyway, so that's a good story.
That's great news. No, that's great news.
So we'll reach out to you all before we go to kind of say, what what matters are of concern to you before we head up there. So we kind of have sort of everybody's guidance on how we can scope that job, because it's an important one.
Yeah, that is. No, thank you.
Steve, it appears that you're down several people from your scheduled head count. How do you determine what the appropriate head count is? And we seem to be getting by well now. Does that mean we should take a look at scaling down, or we're not getting by so well and really need to get back up to full speed?
Well, internal audit, right now we're at full complement. So that's a good story. And the only reason we're behind, because again, we did move over and do the public records request work. So I would presume that in a short matter of time, we probably have to say that we wouldn't have gotten done with the full year plan for FY20, but we think that being that we're fully staffed on the internal audit side, that we can go back to our history of getting our full plan done by the end of the next fiscal year. Now, over in the forensic team, see, that's an interesting business, because in the last year, our call or our hotline complaint volume dropped. That's counterintuitive, because you would say, well, that's a good story, because that would probably mean that we don't have as many control concerns out among the teams and the departments. But it probably goes in the opposite direction. The way Julie and I perceived it was that there was probably a lack of trust, if you will, and that I think because the hotline has a long, good, solid history with our employee base, that people know if they have a complaint or a concern, they could call in. But I think with the prior administration, the fear was that it would fall on deaf ears. So we're happy now that with calls back, the volume is picking back up. But forensic is an area that I would like to get back up to complement, because that kind of, just in normal times, that just ebbs and flows. We might get a lot of calls coming in, and it depends on the criticality or severity of the call. If it's dealing with like fraud, waste, or abuse, obviously we have to pass one down the street to the Inspector General's office. But the backstory on that is that we usually do a lot of the heavy lifting as far as looking at time records and those types of things that the OIG doesn't have ready access to. So they piggyback on our efforts. So we will have a good collaboration there. And then in Frank's world, he's actually done okay not having the senior analyst. But again, I think to kind of get that program up to speed, we would like to get that position filled. So I think to get back up to that complement of about 13 people, which is where we've been the last several years, is optimal for us. We're down, like I said, we're down 3 people, but if we can get back up to that, we can just keep on a normal pace and attend to the important things and get our reports and our end products out to the people that need to see them on a regular basis. So we've had a little slippage because of all the noise in the system over the last year, but we're tracking better again. Everybody's back on normal operations. So it's kind of a long way to answer. I would say that we want to fill the open positions. It just happens that right now on the forensic side, we haven't had a lot of calls, but they are picking up again. Did that answer your question, sir?
Yes, thank you.
Thank you very much. Any other questions for Steve? Steve, you've heard me say, and I'll continue to say, I just think that we need to beef up the ethics office and make sure that people do trust us again. I think the fear of retaliation and the fear that was in the organization, it takes a long time for the rank and file to forget that fear. So we'll continue talking about it in this committee, but anything you can do to help us think through how we make sure that people understand they can trust us, it would be helpful.
Absolutely. And actually, while that reports to me, so we work very closely together. So, and again, that meeting that the compliance group is going to have with the ECRC, I think probably our deliverable that we'll present there, we'll make available to you all as well. And maybe we'll take a few minutes at the December meeting to talk about that, because again, it's like Paul was saying, kind of getting a group together to say, how do we keep this from happening again? Because I think the general consensus was, it didn't feel right, it didn't smell right, but it just seemed like there was a lot of
Whoops.
Well, the problem is my iPad that I'm talking to you on runs through my iPhone. So if I get a call on my iPhone,
Aha.
goes on my iPad. But anyway, so I think there's going to be some work around that. And so we'll have I think we have a good report out to you at the December meeting.
Fabulous. I look forward to that. Thank you very much.
Thank you.
All right. If anything further for Steve? Then we'll move to Council Auditor's Office. Jeff, are you out there?
I don't think the council auditors have probably had anybody attend. Probably, gosh, going back to Robert Campbell before he retired in like 2016 or 17. So they typically don't attend. I don't know why.
Okay, no worries. They're always invited and are a big partner for us. So and they work closely with EY in our audit. So is there anything to come before the executive session of the Finance and Audit Committee?
No, ma'am.
All right, hearing nothing then, we will stand adjourned. Thank you all and apologize that we're 6 minutes late. I hate that. We'll work on it, but there's just so much to talk about.
Good job, Chairman.
Thank you, Chair.
Nice
Miss
meeting
C.
you.
Thank you. Bye, everybody. Thank you.
Thanks. Take care. Bye.